You don't need to have one common currency, especially now with all these different tools available. Like as a consumer, I can also easily use Wise or any of the other tools to have all sorts of currencies. And young people, they're used to their crypto wallets. They're used to having different digital assets. So we can easily have all sorts of currencies across the world without having to rely on one reserve currency. And I think the reserve currency will probably be then gold, but not officially backed, but more as a sort of a benchmark.
This is Little by Little with Andy Schechtman.
All right, welcome back, everybody, to another episode of Little by Little. I'm honored to have with me Paul Buitink, the director and co-owner of Holland Gold and the host of Reinvent Money. I've been on Paul's show, so a little quid pro quo having Paul back on, get a little bit of the European perspective. Paul, how you doing, brother? Good to see you again.
Yeah, thanks, Andy, for inviting me on the show, and I'm doing great. I mean, like I just told you when we had this pre-conversation, things are going crazy, of course, in the precious metals market, and in where I'm based in Europe, and I'm focusing on the Netherlands and Belgium, we see a lot of demand. So yeah, times are crazy. I constantly need to expand, hire more people in order to keep up with demand. So yeah, things are going well.
Glad to hear it. I love Holland. I love Amsterdam. It's I don't know, man. Living in the United States and then going to a place like Amsterdam, a city built on canals that's 700-800 years old. It's I always enjoyed it a lot, and been there several times. And next time I'm there, I'm going to have to look you up and have a Heineken with you.
Yeah, sure. I like Florida. So next time I'm in Florida, I'll make sure to give you a call.
Hey, man, it's good to see you again. I appreciate you jumping on. I'll jump right into it with some questions. And again, the European perspective, I think, will be something most people will like to hear and probably haven't heard. So with that being said, let's just jump right into it. You know, I guess I'm guilty of this. A lot of us who talk about what's happening in this industry, I guess, could be guilty of it. And I mean, we hadn't do a financial reset, or is that just fear-mongering from a guy like myself?
I think it's a very good question, because I also almost on a daily basis wonder myself, like I question myself, am I fear-mongering, or am I just spitting truth here and trying to really prepare people? And then I always come to the conclusion that I am in the gold industry because I see certain things happening. It's not the other way around. It's not like because I'm in the gold industry, so I start fear-mongering. No, I actually see what's going on for a long time before joining this industry, and I see things playing out, and people need to understand how things work and how the financial system is basically not sustainable the way it's built. And that's why people should find ways to protect themselves. So that's the order of things. Yeah, I think we have the responsibility, you, me, other people in the industry, to also always, make people think for themselves. I always urge people like you, don't just accept anything as a truth. Question everything. Also question guys like us, but look for the data yourself. Look how things are, and draw your own conclusions. And then I cannot but conclude that the financial system we are currently in is just not sustainable, and that's one of the reasons why people are now buying gold in great quantities. But also that's one of the reasons why people are looking into crypto or trying other things. The dollar, but definitely also the euro, we're going to talk about that in more detail, is just set up for failure. And so since I'm based in the Eurozone, I really want people to understand what's wrong with the euro and why it's unsustainable, and how you could try to protect yourself from a very disruptive end at some point.
Well, I love the answer. I often think about that too in my podcast, and I've gone as far as saying, for the first time in my life, at least during the last administration in particular, that it wasn't fear-mongering. I was actually fearful for the world my kids were growing up in. And I think that's a fair point. And for those of us who really, look, there doesn't have to be a delineation between running a business and doing it the right way and trying to do right by people and try and educate people, even if it could be construed by people who really don't understand as fear-mongering. There's that fine line there, and I agree, it isn't fear-mongering. It's doing the right thing while at the same time being prideful and running a good business. So I like your answer, and I also like your answer of questioning things, because if we haven't learned anything but to question everything over the last 4 years, we've learned nothing.
Exactly.
And I think questioning everything right now is very important. So, like the answer, you mentioned crypto. I know that you are someone who talks about crypto, not just gold. And so when I think of gold, I think of it as an asset that's, outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, even collapses and governments trying to ban it, and all of these things, yet it's still here. Bitcoin's been around for 15 years. So why should I trust a code-based asset over 5,000 years worth of historical precedent?
Yeah, for me, it's always it's a question of and instead of or. I mean, let me tell you a little bit about my journey. So I started in gold in 2010. I worked for James Turk. I saw you had him on your show too, and Jeff Turk. Lovely, very honest, good people there. And James really was in the 90s. He already understood that gold would be the future again, and how you could also digitize it. I've learned so much from James. He's been my mentor ever since. So he got me into hard money basically, and I worked for gold money a few years, and then at some point I found out about Bitcoin, and at first I rejected it because it's like I was used to something tangible, something physical, something with an amazing history, something like gold and silver. But I did at some point start to appreciate Bitcoin as well as an option outside of the financial system. And then funnily enough, 4 years ago, I pivoted back to gold because I saw that Bitcoin couldn't really live up to some of its promises. I still liked it, but I also started to get interested in gold again. And just before the amazing run, of course, started, basically, I joined Holland Gold. I became the director. It was already an existing firm, and we've had a few years of tremendous growth. But so I made a bit of a pivot twice from gold to Bitcoin back to gold, but I still like Bitcoin for what it can do. I've lived in many different countries. I've also lived in Ecuador, for example, and it was a pain to move money from euros from Holland to Ecuador. You would have to wait for days and with high fees. And the whole fact that you could completely bypass banks by using something like Bitcoin really was amazing. And that's, of course, something that gold can do as much. Of course, you have all these digital gold assets too, like stable coins and everything like that. But I did like the beauty of having this technological solution available that would allow me to transfer wealth regardless of place and time. And that's still something I like about Bitcoin. So I still have some Bitcoin. But yeah, gold, of course, is the money of all times. And especially what you currently see happening is that when there's really stress in the system, when times are very uncertain, people go to what they're used to. And especially the people that still control the system to a certain extent, central banks, some of these entities, they have gold, they understand gold, they don't understand Bitcoin, they don't like Bitcoin. So gold is the ultimate safe haven, and that's what we're seeing right now. But I still like the promise Bitcoin has, or any other cryptocurrency in that sense. I like Friedrich Hayek, I like Ludwig von Mises, I like competition. In that sense, I'm very American. I like free markets. I also like free markets in money. And if in the free market of money, Bitcoin rises as the ultimate solution, fine with me, right? I want people to be free to choose their own monies, and in that sense, I like Bitcoin just as I like gold.
Right on. Yeah, you're right. It's hard for us old guys to embrace something we can't put our hands around. I can hold a gold coin like this and know it's in my hand, and I see it and I feel it and I get it. Trying to find value in a code is hard for a lot of us. I've gone along kicking and screaming and have my toe dipped firmly in the water, but just my toe. Whereas I'm 8 feet underwater as it pertains to my beliefs on gold and silver. But at least I am acquiescing to a point of participation, at least a little bit, and open to understanding and learning more. So I like your answer, and certainly the utility that it offers, the versatility, the transactionability. Those are all things certainly that I understand, and I appreciate your insight on that. But we've heard a lot about a gold-backed currency. I interviewed Judy Shelton recently, and her book, where she advocates for issuing treasuries anywhere from 2 to 5 years, even 50-year treasuries that are backed by and actually deliverable in gold at redemption. All of these things are starting to accelerate the talk of gold-backed currencies, gold-backed stablecoins. In fact, Judy did say to me that her hope would be that once they issue, and she thought they would be issued July 4th, 2026, that was the discussion she's had with Trump, the 250th year anniversary, that there would be stablecoins issued off of the 50-year gold-backed treasuries. All of this stuff seems to be accelerating, at least in terms of discussion. Do you think that a new gold-backed currency, whether it be a common currency or in the case of the BRICS, a settlement currency backed by gold, will emerge? Or is that just a pipe dream from a guy like myself who's been selling gold for 35 years?
Well, I like how you also do this self-reflection, whether it's indeed your bias or it's really happening. Well, when it comes to the BRICS currency, I mean, there's just so much talk about it, but it's so far it's been proven rumors and nothing more than that. Even though, of course, within BRICS countries, sometimes certain officials say something, but for now, it seems like they want to use their own local currencies. I mean, look at China. More than half of China's trade is already being conducted in yuan or other local currencies. And I talked to Kathleen Tyson the other day. Perhaps you also know her. She wrote a book about multi-currency mercantilism, and that's the kind of world I think we're heading towards, where the dollar is not the major currency anymore. It's not the reserve currency anymore. It's just one of the currencies. I think in the euro will probably cease to exist at some point. But just like the pound, I think the dollar will remain a currency, a popular currency, but just not as popular as it currently is. And in that world, of all these different national currencies, I think gold could become like the anchor in which countries can settle, but I don't think it will be officially backed by that gold. I think gold will just be a very important reserve asset, and we already see it's now the number 2 reserve asset after the dollar. Euro used to be number 2, but now because of all the gold buying over the past few years, like more than 1,000 ton a year for 3 years in a row, you see that gold is now the number 2 reserve currency after dollar, and I wouldn't be surprised if it's going to be the number 1 currency, because there's still so much buying to be done by developing nations. I talked to the World Gold Council, and if just the developing nations, say, want to have the same amount of gold as we have compared to our GDP or our total reserves, then, man, there's so much gold still needs to be shipped to the global south, and that, of course, that will have a huge impact on prices as well. But I think that's going to be the world where gold is going to be a very important reserve asset, but people are going to trade in all sorts of currencies. And because of the technological solutions we have, it's not difficult. Like, one of the main reasons why the Dutch people were duped into accepting the euro is because we would need it for trade. But some of the non-euro countries within the European Union, they do just as well as Holland, or even better, even though they don't have the euro. You don't need to have one common currency, especially now with all these different tools available. Like as a consumer, I can also easily use Wise or any of the other tools to have all sorts of currencies. And young people, they're used to their crypto wallets. They're used to having different digital assets. So we can easily have all sorts of currencies across the world without having to rely on one reserve currency. And I think the reserve currency will probably be then gold, but not officially backed, but more as a sort of a benchmark.
I agree. You mentioned all the gold that would need to flow to the global south. The United States has been a net exporter forever. Since the election, since November, we've been a net importer. And just as a note, a lot of people, I've been talking on my interviews for the last couple of days about all the gold coming in and leaving London, and there's been enough talk about that. I'll just mention one interesting thing. 59,296 contracts stood for delivery on the February gold contract. That's a record, all-time high, surpassing the June 2020 record during the pandemic and QE to infinity of 47,132. So you had 5,929,600 ounces stand for delivery. on the February contract. JP Morgan is bringing in $4 billion worth of gold to deliver for the February contract. This is unheard of. Something's going on with gold, and it's now coming this way after always going that way. Interesting things are happening for sure, but we'll go back to Bitcoin for a minute here.
Hey, and Andy, who's taking delivery then? Because I talked to Alistair McLeod. I'm not sure if you had him on your show already, but the
Not
guys
yet, soon.
He should, yeah. And the video is already going viral because he's basically also saying, like you've been saying all along, like the gold isn't there. I mean, most of it has been leased, has been lent a long time ago, and so we all really are looking forward to have a proper audit of the Fed, right? So could it be that the gold is going to the US because the administration wants to make sure that the gold is eventually there when an audit comes?
Well, I'm glad you asked that question. We can deviate from script because, yes, that's what I do believe. I really do believe that. At the same time, you now have JP Morgan, who's always been the custodian of SLV, now the custodian of GLD as well. At the same time, we're seeing record amounts of gold. And, you know, you ask who's buying that. JP Morgan, Blythe Masters used to run their trading desk, and there are videos out there, if you Google it, where she says JP Morgan doesn't buy gold for themselves in their house account. It's for customers. Well, who's got $4 billion to buy gold? Doesn't that seem like it's a little richer perhaps than just a hedge fund? Doesn't that seem like maybe it's more like, I don't know, the federal government or the Federal Reserve? It's a very interesting proposition to consider. We go from net exporters to net importers, record delivery. I mean, you're talking the amount of gold that was delivered. Previous record is 12,164 contracts less at 100 ounces apiece. Try and multiply 5,929,600 times 2,900 in your calculator. It gives you the E. It can't even figure out how big that is. That's how much gold has been delivered in. And also, to your point, and you're the first person who's connected the dots with me that quick, so kudos to you on that. Since November, we have seen, where is the number? Since November, we have seen, pardon me, since we're kind of off script here, I figure here to 12.5 million ounces of gold and over 45 million ounces of silver have moved from London to the United States. And while we're on the topic of London, you know, they have a T+1 settlement, and now it's T+6 to 8 weeks. It's almost as if it's a default. So your conversation with Alistair, I'm sure, had a lot to do with that. My take on it all is that this is a lot bigger than Trump tariffs. This is the ruse, in my opinion, to bring it home for possibly what Judy says, you know, peg a treasury market to gold. Well, maybe we've leased too much of that gold out. Maybe that's why we haven't audited Fort Knox. Maybe. But interesting times for sure, brother. No question about it.
Yeah, maybe it's interesting to, I have an interesting story. Like in 2012, so I was working for Gold Money. That was when the Bundesbank started to ask questions about their gold in New York, and they started to, in the end, they repatriated quite a bit.
5 years later.
Yeah, it took them years. But I also had my, I knew someone within Parliament of the Socialist Party, of all parties, and I started asking questions like, you should also ask the Dutch Central Bank or the Ministry of Finance, like, why do we have so much in the US? Because we had more than half of the Dutch gold stored in the US. So eventually it led to questions and also to the repatriation of a lot of Dutch gold. So we had more than half of the gold stored in New York, and now it's 31%. So 20% of the reserves we moved to Holland, but it didn't take us years. Because Germany, they used the bullshit excuse that it wasn't possible physically, logistically, but we did it in one go.
Well, it's interesting, and that really that time frame in 2017 shaped my thinking on a lot of things, because you're right, the Bundesbank had been for years saying, give us back our damn gold. In 2017, they made a real big deal about it publicly. I remember reading it in the Wall Street Journal, but to your point, my standard verbiage that I've probably said 1,000 times on podcasts was, that year, shortly thereafter, the Dutch National Bank, the Bank of Turkey, Hungary, Austria, the Czech National Bank, they all said, give us back our gold, and then went on a buying spree. Those banks in 2018 bought more gold as a group than they did in the 60 years previously combined. They doubled that number in 2019, and then somehow miraculously, as if it was just magic, the BIS said, oh, by the way, gold is now a tier 1 reserve asset, the only other tier 1 reserve next to U.S. Treasuries. These insiders know the playbook. And when you see all of this gold and silver moving here, it's as if the insiders know the playbook. When you see JP Morgan take control of GLD on top of already controlling SLV, all of these dots, when you see Cynthia Lummis, when you see the head of your central bank, the Dutch National Bank, has been screaming for a few years, let's revalue the gold. And what's the name of the account that gold is held in? Oh, yeah, the gold revaluation account. Same thing with members of the Bundesbank, revalue gold. And now Cynthia Lummis here, the senator from Wyoming advocating for the strategic Bitcoin reserve, said we should revalue the gold that is supposedly held by the Fed on behalf of the Treasury to do just that. So these crumbs, if you will, that you see over there, which really I find interesting. Very few people I've ever talked to have been able to see those crumbs as well. To me, signals something much bigger happening. I would agree with you. I think there's something in store for gold, and I do think that, I guess, in a nutshell, and specific to your viral video with Alistair, who is coming on in the next few weeks with me, I'm sure we'll talk about this, is just that this is much bigger than what we are being led to believe is just a function of Trump tariffs. I guess let's just stay on that thread for one moment. So if the central banks are buying gold like crazy, as they are, and repatriating it, right? I don't want it to be held anywhere else. You look at, everyone kept their gold at the Bank of England and the New York Fed to give direct access to the COMEX and the LBMA. Well, we'll forgo that, is basically what they're saying. We'd rather have it in our own possession. So if they're all buying gold and repatriating it, including now the United States, what do they know that we don't, brother?
Yeah, they know a lot more than they're willing to admit. But like, if I think about it, we have now 31% in Holland, and it's still 31% in New York. And then 38% we have divided over Canada and London. But I think it's time for more questions in our parliament to ask for a full repatriation. At least everything that's in the US, but definitely what's in London should at least be audited. We need to make sure it's there still, all the bar numbers, everything. And then and perhaps it's best also to move that to the Netherlands. But at least it should be audited properly. Because remember the story, Germany, when they, for the first time, I think they asked about whether their gold was still there. I think it was 2007 or so. They were refused access to the vault. It's just
doesn't sound like a good deal to me.
No. But of course, we know from the Germans when at the end of Bretton Woods, when the French were withdrawing their gold from the US, Germany also wanted to do it. But then Germany was threatened that the US would pull troops from Germany and would basically cancel their security blankets. And then Germany caved in and they stopped asking for their gold. So we know the Germans. They listen closely to what the Americans impose on them because they're afraid of losing their security from the US. But I mean, I think that the race is on, and just like you say, the central bankers, of course, they know much more than we do, and they used to be, especially in the West, they used to be run quite tightly. They were able to form a London gold pool. They made central bank gold agreements, but I think that era is over, and it's. Everyone's just trying to optimize its own best interest. And if you see what some of these European nations do, like Poland and Czech Republic, they of course, they are not Euro countries, but they should be in the end. And they are buying a lot of gold. And even a country like Ireland, which is part of the Eurozone, is also buying gold. So they know something for sure. And I'm glad that at least some of those central banks have waken up and tried to do what's best for their own citizens. I mean, I expect my central bank to take care of our finances and to do what's best for the Netherlands, not to do what's best for Brussels or for Washington.
You know, for a guy with no gray hair, you have a lot of wisdom. And and you have a good understanding. I've met very few people in my years who get it quite the way that you do. I commend you for your acumen and your historical knowledge of what's going on, and it's that knowledge when you can put the dots together, because all of the things we're talking about in and of themselves are significant. Trying to put them together and see a puzzle that starts to take shape is the interesting thing. And
Thanks, man.
and you look at these moves, this progression of events, and you can see something is happening, maybe bigger than we're led to believe. So we'll go back to Bitcoin for a moment. A lot of people are there's that fence. What side are you on? Or maybe some are on both sides, like you are, and kind of like me. The ETFs, good adoption or a Trojan horse for government control? What's your thought?
Ooh, good one. I mean, within the Bitcoin crowd, there's lots of infighting too about this whole development. Like, I'm one of the old school Bitcoin guys, be your own bank, and we try to bypass the banking system, and BlackRock and all these guys, they're the bad guys, and now all of a sudden they're the good guys. So it's very confusing. One part of me says, look, let these Bitcoin ETFs just enter the market, let them buy up the Bitcoin, so the Bitcoin price will rise. That will lead then to more people buying in. It's like this adoption cycle, and of course it's a scarce asset. So if the whole world is going to use Bitcoin, before we get there, it has to go through this hyper Bitcoinization, which we're currently also seeing in gold, of course. I mean, with the scarce assets, if you want to have mass adoption, it will go through this cycle, and it will go with ups and downs. So parts of me saying, look, this is just a natural step in the evolution of Bitcoin becoming a worldwide adopted asset. But at the same time, of course, if so much is centralized through companies like Coinbase, because most of these ETFs use Coinbase, I mean, it's also, of course, a recipe for disaster, and it's more centralization, whereas I would like to see more decentralization. So I'd love people just to own it themselves, just like they should own gold themselves, ideally in your hand, or at least at a safe place where you can also have access to, and where you fully understand and trust the company having the deposit. But with Bitcoin, it's the same thing. I would like it to be spread across the world, with people having it themselves, being able to transact among themselves without having all these centralized intermediaries, because otherwise we're just replicating the existing financial system and we win nothing. So it's a bit of a two-edged sword, I would say.
I agree. I originally felt that way when they issued the COMEX contract on Bitcoin. I thought, well, geez, it's kind of losing its purity, and centralization is an interesting way of looking at it. I mean, the financialization is to me as well. It's so tied to the stock market. You wonder what happens if there is a problem in the stock market. One other thing that, just as a side note, that I wonder all the time with the stablecoin market being so tied to the treasury market right now, with Tether and USDC and even the new Ripple dollar-based stablecoin, you look at their balance sheet, it's almost entirely U.S. treasuries. And the ironic thing is, everyone trying to leave the legacy system is actually in some ways supporting it by the stable coins. But you're right. To me, I wonder, part of me that, Bitcoin, the theory behind it, to me, made a lot more sense to me before we saw the mass adoption through ETFs, because the people who are holding it in the ETFs are not the Bitcoin maximists. They're not the hodlers. They're not the ones who look at it quite the way maybe you do. They're just trying to capitalize on its run up, and maybe don't have the strongest of hands, and the respect that the first sign of trouble they bail. I don't know what to think of it because of that, but I wanted to ask your opinion, and I appreciate your insight on it. It's a tough one. So along that same line, let's put them both together. I don't want to make it sound like these things are doom and gloom hedges, although they kind of are. I think there's hell of opportunity in metals and in crypto. I mean, there's opportunity to be found, right? But let's just say we do wake up tomorrow morning to some form of a full-blown financial collapse. And there are a lot of people who think that that's imminent. And to some degree, I could make the argument that's true. What's the first move? Gold, Bitcoin, a shotgun, cabin in the woods. How bad could it get? And what's the asset to own if we saw a financial collapse? And keeping in mind what we just talked about with the ETFs, this massive amount of Bitcoin held in an ETF, and the same thing is true about the gold ETFs. What's the first move?
Yeah, in Holland, it's not as easy to buy a shotgun, and we also don't have a lot of woods to have a cabin in. If I would be in your place, if I would live in the US, I would probably go for that first. Of course, the worse it gets, the more you need, like food, ammo, your own place. But in general, I would say the worse it gets, you would prefer real hard assets over something that's digital or not tangible. So if shit hits the fan, I'd rather own gold than Bitcoin. But even more silver probably, like then if you really need something to barter with, then silver coins probably are even handier than gold coins, for example. But then if you have, the internet could be disrupted. You could have already you see in China, they with the Great Wall, they basically have their own internet in to a certain extent. So perhaps the internet's not going to cover the whole world completely in that sense. So yeah, how useful would it be then to own Bitcoin? Hopefully we don't get that point, and it will be more of a smooth transition. And in a smooth transition, I do think it makes a lot of sense to have some Bitcoin, because in that world that I described earlier, where you have a multi-currency world. So let's say we transition smoothly to a multi-currency world where there is like a lot of people, a lot of countries would like to be sovereign. They would have the key industries within their own country. There would be less trade, but there will be more like mercantilism, where countries, they want to basically stock up on key assets, key resources, gold. And perhaps Bitcoin would be in that world also one of the assets that countries would like to accumulate. We already saw the Czech National Bank pondering about whether they should buy some Bitcoin or not. We have, of course, in the US, these plans about the strategic Bitcoin reserve, or now it's called a digital asset reserve. So it's already, you already see some a lobbying power there from people who probably would like to see other coins within the reserve. But we have, of course, also El Salvador. So there could be a world possible where besides gold, Bitcoin is also an asset that central banks or sovereign world funds would like to accumulate. But it assumes a more smooth transition. But the harder the transition is, the more you would like to have tangible things. And then if it's a disaster, then I prefer to have that cabin with enough food and a shotgun. But so that's like the range of opportunities. The more difficult it gets, the harder, the more sovereign you need to have your assets.
Well, it just seems to me that preparation is in order, and to not put all your eggs in one basket, spread it out a little bit. Shotgun inside your cabin in the woods, filled with gold coins and strong internet connection. You're all set.
Yeah.
All right, so let's just hold your feet to the fire. If you could hodl one asset for 20 years and only one asset, and there's no hedging here, you have to pick one, none of this political stuff, what would it be, Bitcoin or gold?
Then I would choose gold.
God bless you, brother. That's the right answer. You win the gold star.
I can now return to your show then, right? Otherwise, what I do would have kicked me out.
Back. Yeah. Hopefully I'll be welcome back on yours at some point. So any last thoughts on your mind that you'd like to share with our American public viewing audience? Anything you'd like to leave us with? And then, of course, after, I'd like you to tell people the best way to follow what you're doing, your YouTube program, if any social media, how can people check out what you're doing? But any last thoughts first?
Yeah, sure. Thanks, brother. Yeah, like I think what you said earlier is spot on. That's diversify. That's also what I tell customers. Sometimes I talk to customers and they're so paranoid. They'd love to have all of their assets or all of their capital in gold. And as a businessman, I of course applaud that. But as a human to human, I sometimes just sometimes have to sort of restrain these people a little bit. Say, look, make sure that you think about what you're doing and also spread a bit. It makes sense to own your own house or to buy some other commodities or buy some farmland, or just make sure to spread your assets a bit. I think it's as a decent entrepreneur with the best interest of my customers at heart, it makes sense to also give people the full story. And so I like to spread and diversify myself. And that's a good thing about gold also. If we have a lot of years, if you look back in history, years like 2022, for example, or 28, where stock markets go down a lot, then gold actually does well. So for people that don't own gold and who still think, gold is just this old artifact, it doesn't generate any income. Look, if you just look at a performance basis, and you can look up the numbers from the World Gold Council, it makes sense to have some gold in your portfolio, because when you're diversified, just 5 or 10%, it actually also leads to a better return of investment if you look back over the past decade. So spread, diversify, and also don't worry too much about the gold price. Even if the gold price goes down a lot, like in the long run, possibly it means, I think it's highly unlikely, but it means that our monetary overlords are actually managing the money better, which would then mean probably lower inflation and perhaps a more equitable financial system. So either way, if you buy gold, you're good. If gold goes up, that's always nice, but it's an insurance policy. If gold goes down, perhaps the world is a better place, which is good for you, your kids, your grandkids. So in that sense, you always win, and that's what I like to tell my customers too. So yeah, that would be my final advice. And also in line with what you always say, just question everything. Don't trust the mainstream media. Of course, we all know that, but also alternative media. Listen to several of them. Always look up the facts, the sources, and in the end, be your own judge and come to your own independent conclusions and act based on that.
It's interesting. When you mentioned diversity, you mentioned other commodities and farmland. Intuitively, we're looking at the world the same way. My mentor, Richard Russell, used to say, you identify the primary trend and broadly diversify within the primary trend. So to me, a primary trend is of fiat currencies in trouble. So yes, farmland, other commodities, precious metals, mining stocks, cryptocurrencies. These are all things that help you diversify within the primary trend rather than being broadly diversified. Once again, I applaud your insight into these things. I respect and applaud that very, very much. I agree with you. Question everything. I think if we haven't learned to question everything, then none of us learned a damn thing over the last 4 years through the pandemic, the lockdowns, and here in the United States, it seems like everything the previous administration told us wasn't true. And it's really a shame. And that's not conspiratorial. That's been proven to be fact. So yeah, you're a wise man, Paul, much wiser beyond your lack of gray hair, man. I'm a little envious. But what's the best way for people to follow what you're doing?
Yeah, so my podcast, which is interesting, especially also for American viewers. Most of my viewers of my international podcast are actually American. I have a lot of American guests on the show. You can follow that on reinvent.money. I try to talk to the best minds about geopolitics and money. I talked to you. I had guys on like John Mersheimer, Jeffrey Sachs, Peter Schiff, a lot of the big names. I love to have those conversations. Please follow me there. And then for people that live in Europe that would like to buy some gold or some silver or maybe store it with us, go to hollandgold.nl. We have an English website as well. But that's really for when you live in Europe. If you're in the US, you should just go to Miles Franklin, of course. But thanks again, Andy, for having me on. And next time you can return to my show and give me an update on what you see. But it's
brother. And now that I think about it, maybe you and I should talk offline sometimes, because I do have clients in Europe and say, can you help me? And oftentimes I really don't know who to point them to. So that will be a topic of discussion offline. Maybe send me some information how we can work together, not just talk about what's happening in the world. You're someone who I think gets it. And that to me is the first step for me of even acquiescing to something like that. So I appreciate you coming on. I really do. And I'll look forward to picking up where we left off. I hope you and everyone else out there stays well. And just thanks for joining on today, Paul.
Yeah, same to you, mate. Thanks for asking, and keep in touch.
You got it, brother.
Little by Little with Andy Schechtman.